So hello everyone, welcome to this video. I hope you're having a good time. Promise to do this video where I do a walkthrough of the very basic concept of this strategy. I'm going to do some other materials that's going to be like a follow-up to this. So quickly, what do we want to do right now? I want to give you like a basic walk down of this strategy using just 3 simple steps. This strategy can be aligned to work with smart money techniques, SMT, smart money concepts, SMC, ICT, institutional traders, and even your own strategy. You can combine it with these 3 simple steps that I'm going to show you now. What you need for this strategy to work is just one single candle. It's not like the strategy is built. No strategy is built on a single candle. But we're not just talking about any candle here. We are talking about, first of all, the first thing you want to do. I talked about 3 steps. The first step is that you want to go to the 4-hour. So once you are in the 4-hour, right? So the next step, still in the first step, you want to switch to the New York time setting on that symbol. Once you go to settings, depends on if you're using your laptop or mobile phone. In this case, I'm using a mobile device. Go to settings and then symbol, then time zone. This you want to use the New York time zone. That's UTC -5. So this time zone is what's going to enable you to work with the New York 4-hour range, which is what strategy is basically all about. So once you've selected the New York time zone, then the first candle of the day. Now let me start from Monday. You can see this is Sunday 18th. This candle here opened, this 4-hour candle opened Sunday 22nd. Go here, next one. So the first candle to open on that day, on this Monday now, 5th of January 2026 at 2 a.m. Remember, this is New York time. This is the first candle that opened. So all you're interested is with, your interest is on this candle, and I will show you how. So first thing is that you want to mark the low. Let me do this quickly. You want to mark the low of that candle and extend it to the end of the day. So the end of this Monday, January, is obviously at 22. If you extend it any further, you will have Tuesday 6. All right. Monday, good. That is the end of the day. So once you've extended it like that from the the low, that's the bottom week, and then the top week, same thing for this day. You stop at, you can see the same thing there. Once you have this done, you can use your, what do you call it now, your trend line. That's your trend line to do the drawing. And then if you have done that, you want to make sure that the pixel is 2, so that it will not be tiny like 1 pixel. If you even like, you can use 3 pixel, but I think 2 is standard for me. So here, so That is the first step. This is the first step. Everything you have done here, from going to 4 hour to changing the time to the New York time. Of course, if you've done that, you don't have to be doing it all over again. So the first step is to mark out the opening days 4 hour. You have to wait till this candle close before you mark this low and high. And obviously this candle closes at 2 p.m. for Nigerian time. That's mostly the time. Okay. Sorry, 2 p.m. 12 p.m. That is when this candle that opens the New York day usually opens in our time. Here it's 2, but it closes 12 p.m. I've already said that. So you want to make sure you mark the high and low of this first candle, and once you've done that, you can now proceed to the next step. The next step is going down to your 5 minutes. Okay, you can see I've gone down to 5 minutes now. I'm just going to try to zoom down back. So this is the day. You can see this was that day. Right now I'm not going to try to pair it with SMCICT or anything. I'm just giving you like the basic strategy, right? And then once the price start trading below the 4 hour range, that is where you want to mark out your interest. And the close here, a candle has to close below, like this particular candle here. Let me mark it out for you. This particular candle there closed below the 4 hour range, right? And then what happened? It didn't close back up. It continued all the way down and eventually closed here, closed back into the range. Now that is your second confirmation. That's a confirmation for you to go long, because it closed, it's coming from the below. Okay, if it happened above, you sell, but this from below. Once it closes below the range and then closes back, and the closing should not be with wick like this place now. This is just a wick. This candle here, it has to be body closing. The body of the candle has to close. Right after that, then you can then take your trade, like the trade we took. Obviously, let me mark out which, because we combined this with other concept. This was the market shift that we traded from. Yes, exactly. Okay, it's not perfect. So, but normally, let me show you how you would take your trade with your forecasting to long position. At the close, or the candle that closed above the range, this is where you're supposed to take your entry. Then stop loss is supposed to be at this low, but because it's a very long movement, you want to look at the next key level, and that key level is here. The key level here, there's a resistance here. You look at resistance and support, then you will target a 1:2. This is 1:2.4. Let me do that. 1:2, right? Okay, however, so long as it's 1:2, so that's the trade. So as you can see, that's it. You hit your take profit. You always you always target 1:2, right? So there is that resistance level. So you want to mark out your resistance level right here. I'm going to mark it out for you, right? Because this will determine where is your stop loss. Okay, so I haven't done that. When the market closes above and re-enters, closes below, you're supposed to take this trade. But as you know, if you are taking this short trade, it wouldn't have been winning trade. Let me show you. This was the market went above and closed here. You're supposed to take a short trade there, but as you can see, if you're taking this trade, it will definitely hit the stop loss. So that's why you combine this strategy with so many other things. But this is the basic strategy, as I promised to show you. So that's it. Even if you trade price action, you can combine this strategy with price action. You can compare price action, breakout and retest. You can combine it with smart money, like we do SMC, SMT, divergence, and whatever your strategy is, once you understand this strategy. So here the market closed outside the range and then closed back in here. So here now, you don't want to take short trades because it's not in alignment with the trend. Like this trade we took here yesterday was a long setup. It's a long trade, buys setup. So, and it's in line with the trend. That's why we took it, among so many other reasons, which I posted on our platform, right? Okay, so that is it. And then you're supposed to trade this within the day, within that day. Like if you look at this ends here, because this is Monday, January 23. So outside of it is another day. You're not supposed to trade the setup again, and you always have to trade it in line with the trend. So the next day, you can see we already marked out the 4-hour opening range and low. So here now, we're waiting for price to either give us a short or long setup based on what we've discussed. So thank you.